Hello and welcome to Crypto Weeklies. In this video, we are going to analyze Aptos and its token APT. None of the content is financial advice. Let's get started. Over the last key performance periods, such as last 7 days, Aptos has rallied by about 40%, taken the center stage in terms of that rally. Over the last 24 hours, most of the cryptos are down, yet Aptos is up by about modest 0.67 or one third of a, sorry, two-third of a percent. If you look at over the last 30 days, if Aptos is up, it's up by about 41%, similar to its last 7 days rally. So last 7 days rally has carried the performance over the last 90 days. Also, Aptos is the third most rallying crypto. If you look at Aptos right now and look at its relative position in terms of market cap based ranking, it's ranked number 32nd. Rallied a lot, currently priced at around $5.40, market cap slightly under 3.5 billion, volume at around 160 million. In terms of tokenomics, there are about 630 million Aptos tokens. Does have a total supply of about 1 billion, so almost more than 60% of the total supply is in circulation. Does not have a max supply, as most of the layer 1 cryptos don't have max supply. It is in line with that token inflation based model. Once all the tokens are unlocked, the unlock schedule for Aptos, again, it's still not at that stage where the new unlocks are kind of at a critical threshold where new unlocks do not impact the price. That would happen for Aptos per this unlock schedule at around October 2023, when the curve kind of gets flattened over here in terms of this logarithmic regression or logarithmic release of the token unlocks. At that point in time, per this model at least, per the unlock schedule that they have set, the distribution would be far more linear. To get to that 1 billion token supply, that ultimate goal is at around 2032, so almost 7 years away from the, little over 7 years away from the current timeline. In terms of now looking at price versus market cap growth, this is the chart over the last 1 year in terms of price growth, market cap growth, slightly different. Again, you can see the lows that you see on the price are much more price chart are much more pronounced than the ones in the market cap growth. That means there is some market cap growth which is not getting reflected in price. So for example, in early March of 2025, market cap was essentially the same as now in early May of 2025, whereas the price back then was much higher than it is now, at one point at around $6.75. This time around, price topped at around $6.20. So that's something of a concern. But again, as the tokens reach that critical threshold of about 65 to 70% of the token released of the total supply, impact of newer tokens goes down. At least that's what we have seen thus far. In terms of the technical analysis, there have been three tops which respect the Fibonacci levels, as well as this lower high structure, and also the base over here has a this green line has a critical bottom that Aptos has hit 1, 2, and now 3 times. Again, this was a slightly lower low than the support at around $4.75. You can say that this support kind of broke to the downsides, similarly to this descending trend line or descending lower height trend line, breaking down to the upside, so kind of balancing it out. If on the other hand we look at the Fibonacci levels of key interest from the 2023 top that Aptos has enjoyed early 2023, there was a lower high of 0.786 level now in March. Now in December, the one Fibonacci level down at around 0.618. Now potentially, if this trend line were to meet that Fibonacci levels at 0.5 Fib, the price for Aptos would be slightly higher than $12.35. If there is a fake out, then it could be closer to the midpoint of or closer to the 0.618, slightly closer to that level. Again, the price did go higher than the 6786 in March as well as 618 in December, but again, kind of at a average level, or realistically speaking, the price was closer to that 618. 0.618 level. This time around, this could the price action could go, again, not financial advice, at around $12.35. That is still little under 2.5x from the current price of about roughly $5. So let's see, the critical levels to watch if in this rally are the 20-week simple moving average and the 21-week exponential moving average, currently at around $6.20 and $6.33. If those levels are flipped into support rather than resistance. So for example, over here in August, as the token rallied from the bottom, there was a critical resistance that it met at a similar level at the 20-week and the 21-week exponential moving average. And then there was a correction to the downside, retested that higher low structure, and then went off and turn that 20-week simple moving and a 21-week exponential moving averages into support from resistance. So if that kind of rally occurs, those are the levels to watch for, $6.20 and the $6.30 as of now. If we look at the current simple moving average based price color coded with respect to risk levels, you can see that the risks, again, they are color coded using cooler colors for lower risk, warmer color for higher risk. Again, this model did a great job of potentially identifying where some of the undervalued phases of the token are. Again, over here, when the risk is less than 20%, DCA at this point, again, not the worst idea. If you want to lower it even more, this less than 10% gets closer to the bottom. But again, there are no guarantees that in every downturn the risk would go at levels between 0 and 0.1. So again, on the safer side, between anything less than 20% risk, this model color codes in shades of blue and purple. Right now, the risk is in the third best position at around 0.30 or 30%. If the risk were to go to that critical level that we would like to see, between 40%, again, which kickstart the euphoria phase for any rallies, to that 70% target, where again, above which it's all guesswork if the prices were where the prices would go in an ultimate euphoria crescendo. So range between 0.4 and 0.7, if that kind of risk levels are achieved by this token, price at those risk levels could be somewhere between $9.73 and about $12.25. So that $12.25 again comes close to that 0.5 Fib level also. So that's one area of forecast with respect to simple moving average and the technical analysis having an area of confluence. If the risk were to go between that 80% and 100% risk, or let's say between 70% and 100% risk, a midpoint for Aptos would be somewhere between, per this shorter term projection, between $12.25 and $14.75. So at around $13, that's where this model again comes to close to the midpoint of between the 0.5 Fib level and the 0.618 Fib level again. In terms of Aptos and on its regression based analysis, again, right now the regression based fair value has plummeted a lot. This is a non-linear model. Again, this model emphasizes on during the downturn, the altcoins can have a continued downturn where the fair value diminishes as there is a downturn in the market. Right now the fair value comes close to that $4, whereas the current price is at around $5 and change, again $5.50 roughly speaking. That's why the risk levels are elevated for this model at around 55% risk. If they were to go to 100% risk, or if we were to talk about in terms of pictorially, this dotted red line does act as a resistance in the downturn, whereas in the upturn, that's where the euphoria phase kind of begins, where the price action turns bullish by taking out this dotted red line as a resistance and potentially holding it as support for a while. That dotted red line at the 2 standard deviation peak above the fair value is coming in at around $7. Again, that's where the price action has to contend couple of resistances over here, especially the 20-week simple and the 21-week exponential moving averages. If the price actions were to rally beyond those, again, the ultimate resistance for this model could be at around $7. And that remains to be seen if the price action were to take out that level. If it were to take out that level, per this model, price action could go as high as about $8.32 in the short term. And these are all short term projections. They are not the bull run peak estimation for the entire bull run. The time weighted average price model though has been telling a different stories for Aptos. Wherever the price is below the blue line, which is the time weighted average price, currently at around $8.33, again coming to that area of confluence. Below that level, for this model, the risks are close to zero. Again, they're never zero, but they are rounded off to zero per the model, which says that the amount of time spent at some of the key levels, this is a measure of the average price of Aptos over a specific time period. And again, it's particularly useful for traders to execute large order without significantly impacting price. So this model comes in handy to identify especially time weighted average price in terms of altcoins, identify where kind of a line in sand where DCA below this blue line, especially for assets which have a future. Again, that could be your own hypothesis, or looking at some of the fundamentals or adoption related metrics. If the underlying asset has a value or a chance to succeed in the next bull run, DCA below the time weighted average price, historically speaking, has not been the worst idea for most of the high quality cryptos. Again, Aptos right now at around per the market cap rank at around 32, has had 3 distinct peaks, but albeit of lower high structure. Let's see lower highs on the tops, as well as lower lows on the bottom as well. If you look at 2023 bottom and August 2024, although it was slightly higher than October 2023, the April 2024 bottom has been much lower than the 2023 and 2024 bottom. So that remains to be seen if that structure were to break to the upside and create a new all-time high DCA below that blue line. In that scenario, looking back would not be a worst time to do that. So all in all, the estimated bull run peak for Aptos with those risk-based evaluations comes at around about $15 in the short term. Again, closer to that 0.618. That is a major area of confluence over here. If on the other hand, if we were to look for some of the other indicators that could help identify which phase of the market cycle we are in, this is Bitcoin and ETH risk. Again, they are in moderate, especially now they are both in this moderate risk between 0.4 and 0.6. ETH has gone slightly down today, but overall they are in an upswing. If we look at the completion of the bull market, it's at about 36%, so nowhere close to the peak. So we are not in the euphoria phase that the market enjoyed in early December of 2024, when the risks were higher than 60%. So all in all, this overall sentiment, although today kind of high at around 83%, or overall sentiment or news related to crypto being mostly bullish over the last 24 hours, the narrative yet are, again, although bullish narrative has taken a center stage, Bitcoin is still controlling most of the attention over the social media platforms. These kind of analysis are all available for free on the cryptoweeklies.com website. You don't have to sign up or pay for anything. If you like this content, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.